Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and this morning, stock market futures are declining. We are off the lows of the session. This is a 4-hour chart of the S&P 500. All of these charts will be 4-hour charts. It is 5:05 in the a.m. Eastern Standard Time, and this 4-hour bar just opened up. And it appears as though it opened up with a vengeance. Let's drill down for a moment to a 1-minute chart. You can see we really burst higher here. The question is, will it last? I mean, you take a look at the price action on a daily basis, and you can see that this market cannot hold a bid. It is rallying intraday, and then it's selling off into the close. This is a bad thing to occur. It is bearish. It destroys confidence because you have what Wall Streeters call the dumb money, which goes running in and buying stocks early on in the day, thinking that they are missing out. It's the FOMO, fear of missing out, when in reality they're being lured into a market that is being propped up. You could see on this chart alone, we rallied here on the 6th. So I would be looking for here on the S&P 500. I'm going to use a different color than green. Too much green up here. Let's go with a festive purple. All right, so what we're looking for here either is a defense of this lower band of support in purple or a rally up and through. Initially, of course, the purple line, the upper band of resistance, but ideally, we need to get back above here, 26.72, and ideally 26.85, because that would mark a higher high. We need that. And if we get that and we close above this resistance level, that'll take us in all probability up to 27.60, thereabouts. Let's take a look at the NASDAQ. The NASDAQ is under pressure as well. We had rallied back beginning here on the 9th. We had recaptured a prior lower band of support. That rally and breakout above this resistance level here at 68.28 failed. We reversed, we broke back down. The rest is history. We are now down over 1% this morning. We're seeing a little bit of a bid on this 4-hour bar here, but this is not looking good. Now, oddly enough, when you take a look at the RSI, it is putting in higher lows, but it simply can't hold its mud. It just is so very weak. Taking a look at the US dollar, it surged overnight, and we are very close to taking out the November highs. That would put us at a 52-week high. And what's really impressive about this rally overnight is the fact that we had broken down earlier in the week, and we are now back at the highs of the week. And this comes after the ECB announced yesterday that they would end their asset purchases, which was dollar bearish, but the dollar has bounced back. And I think that people are not paying enough attention to what is going on over in the EU. You have the yellow vest protests, which are expanding, and the media here in the United States is frankly not covering it. And what a shock, right? God forbid they covered the news. So the dollar, very strong. Taking a look at the euro. The euro is very weak. Now, the euro did break out yesterday. It did get overbought relative to its third standard deviation Bollinger Band on a 4-hour chart. But this sell-off is really a big one. Now, the question is, do we break back down below this lower band of support and then resume the downtrend? That's the big question. Right now, for all intents and purposes, we have a filling of the gap. We have a retest of a prior breakout point. And we may, in fact, be at the doorstep of a new rally on the euro. I wouldn't bet my bottom dollar on it. Let's take a look at gold and how it's behaving in the face of a rallying US dollar. It's down about 1/3 of a percentage point. We were consolidating really nicely most of the week. The miners have had a really good week as they've been trading in this trading range, which I'm updating now. And you can see that this morning we broke down below the lower band of support of this trading channel. So yeah, it's a bit of a concern, no doubt about it. But frankly, with all the geopolitical risk out there, I think it's a bump in the road for considerably higher highs for gold and the gold miners. So we're going to remain long of our gold stocks. As for silver, you can see that silver has had a really good week so far in that we are putting in higher lows, or have put in higher lows and higher highs. But this morning, weakness. We broke down below the lower band of support in red. So the precious metal names, if the dollar holds its gains, may have a rough day today. Let's revisit the S&P 500 before we check out and go over to our member stock chart request. All right, so the S&P 500 continues to hold this lower band of support. If we do rally back, folks, do not chase the rally. These rallies have been fading. Please do not chase the rally. Wait until that final hour of trade to see how we're poised to close. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this. I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. Okay, folks, now let's segue over and into our gold members stock chart request, which is where we review the symbols that our members submit for me to review. We're going to kick things off with General Electric. Now, I was severely reprimanded by a viewer of my commentary a few days ago because I had mentioned that for me to get involved with GE would need to cut its dividend or not make an announcement. And he brought to my attention that GE had already made that announcement, and they cut their dividend from 12 cents to 1 penny. And I need to make it clear, I don't do a ton of due diligence on these names that I go over prior to commenting on them on these videos because I simply don't have the time. It's impossible. I go over way too many stocks. So it's not intentional. All I do is simply look at the data that is provided to me. And at current, it's still showing a yield of 6.67%. Now, I do know that they cut their dividend. JP Morgan also came out yesterday, their analyst, and spoke optimistically about GE, or spoke less worse about GE, and the markets read into it. And I believe they spun off another business as well. So the monthly chart of GE still shows RSI at 13.42, and it's very oversold. We did, of course, bounce yesterday. Do I believe that the sell-off is over yet? Maybe. The market's not done going down, apparently. So why would I think that GE is done going down? But it could be. Weekly chart. We're setting up here for a spinning top formation. We have a lot of resistance up at $8 per share. Back to the monthly chart. Take note of Stokes. They appear to be bottoming out, possible higher low here. It's very early in the month still. We do not have prior support that we could look back upon and say, okay, it appears as though we have hit a prior support level, and that support level should hold. We don't have that here. Unless you go back to a quarterly chart and you take a look at where we've been on a historical basis. And prior to this sell-off back in January of 2009, we haven't been at this support level since April of 1996. And we didn't spend all that much time there. So is this a bottom? I'm not confident in saying that, especially with this market weak and apparently getting weaker. Volume is very high this month, so institutional accumulation continues. Daily chart. Now, on a daily basis, we have RSI hooking up now. It's been putting in higher lows and now higher highs. Stokes are hooking up as well. They're still down below 20. I wouldn't put much stock, pardon the pun, into GE until such time as we begin to rally up and through prior highs on Stokes, last seen back on December the 3rd. Volume yesterday was very strong. ADX signal line looking very bullish. Now, in terms of price action, not so bullish. We rallied up and into resistance at $7.50, and then we sold off the highs of the day, consistent with the market. So I wouldn't be a buyer yet of GE. I wouldn't rely upon a daily chart. I'll be looking more at my weekly charts and monthly charts to divine whether or not we have a true bottom in. A daily chart is simply not going to do it yet. For a trade, sure. The next chart up, Amazon weekly chart. Amazon continues to put in higher lows. We are up on the week by 1.8%. Volume so far this week is very strong, but I see no compelling reason on this chart to go buying Amazon. And I wouldn't be a buyer until such time as we broke out of this triangle formation on a weekly basis. If we break down below this lower band of support, it becomes a short. If we break out and close a band, this upper band of resistance, it becomes a buy. Right now, all stocks are show-me stocks. They have to show us that they have the will and the want to move higher. But as it stands right now, Amazon is weak and in all probability will follow the market and get weaker until such time as it doesn't. It's overly simplistic, but you need to keep it simple. If you overthink this market too much, you're going to get burned. Daily chart. Now, on a daily basis, we're in a trading range here. Here's our lower band of support. Here is our upper band of resistance at the 1784 level. Why am I not talking about this upper band of resistance here in blue? It's because that's not where the sellers are. It's a speed bump until you get up to 1784 to 1778. Stokes maybe, just maybe, trying to hook back up here. I wouldn't read all that much into it just yet. We have RSI, which is back above the 50 level, which is bullish. Volume yesterday to the downside was very light. That's good. So again, I wouldn't be a buyer here until we began to break out. If we closed above the 200 period moving average in red, you could scratch the itch if you'd like, get long of say 20% of your intended allotment should in fact we begin to break out, and then I would add more on a rally and a close above 1784. Now if we break down below 1650 to 1625, Amazon becomes a short. But right now I would do nothing. I wouldn't short it, I wouldn't buy it. AMD weekly chart, we are at current above this upper band of resistance. We have one trading day left to go. Do we hold the breakout or do we fail? I'm not loving the setup here. I would avoid this. We attempted a breakout last week. It was rebuffed. It was rejected. And now we are at current trading off the highs of the week. Up volume is probably going to roll in light this week. Daily chart. Yeah, daily chart, RSI. We broke down back here on the 6th. We have rallied in an effort to try to recapture support, which is now resistance. It has failed. We have Stokes trading down below the 50 level. As my adage goes, when you have Stokes trading down below 50, rallies tend to fade. On price action, you have the 50-period moving average, which is declining and acting as a declining ceiling on the shares. Yesterday, we flashed a bearish reversal bar on the day. We need to hold $19 per share. If it fails, we're probably going a lot lower on AMD. It is not a short yet, so I would not go shorting AMD because we did break out back here on November the 27th, and that breakout hasn't failed yet. We haven't broken down below key support, so AMD remains a watch. The last chart up, folks, is NIO, daily chart. We spoke about this one in the past. The first time we spoke about it was in a bull flag setup. Let's update this. You can see that we had broken down below the lower band of support of that bull flag setup. But now it appears as though we have recaptured those support levels. And yesterday we closed higher on the day by nearly 3%. We did close off the highs of the day. So net, it looks as though NIO wants to go higher. It is displaying relative strength versus the S&P 500. So NIO is looking good. Folks, that is it for this morning. Members, I will be sending out the week ahead commentary on Sunday, which is where we review the health of the overall markets, positions, as well as the stocks that we're looking to put on, the trades that we're looking to put on the coming week. And I'll highlight those potential trades tomorrow, being Saturday, on Best Stock Charts. So make sure that you subscribe to my channel on YouTube and check out my commentary there. Everybody have a profitable trading day and have a great weekend. Be well. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below.